Hello, chart watchers, and welcome to this Tuesday, September 24th, 2019 Market Watchers live show with your host, Tom Bowley. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the market action, we currently have a reversal going on. Market was higher earlier, but now we got the Dow Jones Industrial Average down 43 points, the S&P 500 down 9, the NASDAQ down 63, and the Russell 2000 down 15. So we are seeing relative underperformance by the more aggressive NASDAQ and Russell 2000. 10-year Treasury yield back on the move lower, certainly going lower than I thought here. We are back down now 4 basis points today, 1.67%. Of course, this is coinciding with some difficulty in the market. We need to get that 10-year Treasury yield moving back up. Volatility is the wrong thing to be moving up. We see volatility today up about 6%. Usually when the volatility is rising, we are seeing equities sell off, and that is certainly the case so far today. Utilities and consumer staples, 2 defensive areas leading the market to the upside. Also wanted to point out the TLT, which is the 20-year Treasury bond, also having a strong day, moving up as the overall market struggles. Money's rotating back into the defensive treasuries. As far as weakness today, energy, clearly the laggard. We have now gone all the way back to test that gap support from about a week and a half ago. That was down at about the 60.5 level. That's where we currently trade on energy. The XLE down more than 1% today. Mobile telecom having a strong day, trying to make a breakout. I'll try to get to a chart and show you how important this level is. Home construction making another new high, one of the strongest areas in the market right now. Renewable energy went right up against some key resistance and is backing off of it, down 4 points today, back to 133. 2 specialty retailers coming out with earnings today. CarMax, big gap up. They actually beat top and bottom line. I think the reaction, though, as you can see, not very positive. After the gap up, we have been selling off. AutoZone had mixed results, did gap up, and is also selling off pretty strongly here. So not really very good action across most areas of the market today. All right, let's take a look at the, let's go through what we've got coming up here first, and then we'll go into some economic reports and look at some more charts. But we do have coming up next week, later this week, really, and then into, rest of this week. Let's just go there. Tim Ord will be on tomorrow. He will be here with Dave Keller. And then Dan Russo will be joining me on Thursday, so that should be a fun show. And then Aaron Swenlin coming back in on Friday, September 27th. So we'll look forward to seeing Aaron. As far as today's agenda, got a lot on tap. I do want to talk a little bit about the new earningsbeats.com. As many of you know, I did move back to Earnings Beats as its chief market strategist over the past, maybe 4 to 6 weeks. Been working on some very interesting products. I want to share some of those with you today, so I'll talk a little bit about that. We'll get into the 10 in 10 later in the show. Estee Lauder will be our first stock, so take a look at that chart, see what you think, and then we'll get into the rest of the 10 stocks before we close out the show. Also, I'm kind of interested in your trading and investing strategy, so there is a poll running right now. I'd love to hear what you think in terms of your trading and investing strategy. Do you, do you use fundamentals to determine your buys and sells, fundamentals only, technicals only, or do you use a combination? I'd like to get that from you. Key economic reports, you can see Case-Shiller Home Price Index came in flat, a little below expectations. House Price Index, the FHFA House Price Index for July, came in better than expected. And then September consumer confidence way below expectations. Let's take a look at the reaction, though, in the bond market. You can see here that the 10-year Treasury yield moving lower. It has been moving down for the better part of the last 7 days. The only problem is, and it seems to me a little bit of it's orchestrated with just gap downs. We're not really following through to the downside. If you go back and look at some of the prior selling, you'll see a lot of red candles, sometimes big red candles. That really hasn't been the case here, yet we've fallen from 1.90% down to 1.66 right now. So I'm still expecting this to turn back around, but we shall see. Earnings reports out today. We had a few this morning. AutoZone IHS Market, CarMax, Jabil, and BlackBerry. We'll take a look at just a couple of those charts. First, let's take a look at CarMax. This is one that I find very interesting because they did beat top and bottom line. Nice gap up, but it has pulled back since the open. Get that latest price. Make sure we got the latest action. Yeah, 85.61. I think it would be bullish if it starts making its way back toward the open later in the day. What I'm seeing off of an uptrend is a little bit of a inverse head and shoulders here. Left shoulder, neckline, head, right side of the neckline, right shoulder, and a breakout with today's open. But so far it's failing, and look at the volume. So it's going to be really important to see where this stock closes. AutoZone had a mixed report. They did beat on their bottom line, missed on their top line, though. Stock gapped up early, but has been selling off since. Both of these stocks are in the specialty retail group, and this is one of the problems. Specialty retail has just been an awful area of the market for the last 2 months. Very difficult to make money if you've been trading stocks in this space, and it is hitting or actually going just below a key relative support level, so we want to be careful there. I do also want to mention Jabil Circuits. Big move here, gapping up. Look at the volume coming in and the relative breakouts that this one's making. I think JBL is one you want to keep on your radar as we go forward. Mobile telecommunications today, big breakout potentially, or is it just another failure? 400, you can see over the course of the last 10, 11 months, has been a big resistance area. We're there again. Can we break out? Hard to tell. S&P 500, this is a chart I've been watching in the near term, only because historically the market does tend to struggle this week. So I've been talking about maybe a trip this week back down to this 2940 to 2960 area, test this gap support. Right now we're testing short-term support around 2980. We'll see whether or not that holds. All right, moving back to the dashboard, one thing I saw earlier today is right over here. HOG, Harley Davidson. You can see Harley Davidson. I'm going to update this and get the latest price. It is dropping. Its scooter took a pretty big hit today, and I think it's worthwhile noting because we once again failed to try and get through about 36.5. Look at all these red arrows pointing all of the failures on this stock. And then when you look at the relative strength charts, they're all pointing lower. So when I get false breakouts on a stock like this that has been showing some relative strength of late, recent relative strength, a little bit of volume, that bothers me. I think a big test is going to be, can we hold this 20-day moving average? If we don't, I suspect we're going to roll over and go back down to that $30 level. If we can hold, I think it would be very bullish if we could come back up and make the breakout and begin to see more relative strength in here, taking out these relative highs. So for that reason, HOG is your scooter mover of the day. All right, we're going to keep on moving here. We got some upgrades and downgrades, so I wanted to share a couple of these with you. The first one, first upgrade is Snap. So Snap is important because off of this uptrend, I see a cup here. I don't like the fact that we're testing the right side, though, and reversing on this upgrade. So I'm thinking maybe in the very short term, we move a little bit lower here, and that's something that I think we want to really keep an eye on Snap. Another upgrade today was Disney. Disney was upgraded, gapped up, but is pulling back. And if you look across here, I mean, 130 has been a real key area of support. Even with the upgrade, stock's only up 40 cents today, 132.86. Seems like we'll probably at least get a test of that 130 level before we move higher, and possibly even this gap support, top of gap support on that massive volume. That would be down around 127. So I do expect Disney to go higher, but I wouldn't be shocked if we continue to see weakness down to that 127 to 130 area, in which case I think Disney would become a much more viable stock. Downgrades, couple downgrades, just go over with you. Clovis Oncology. I'm not sure who downgraded, but they're a little late to the party. $32 back in February. Stock's now down to $4.16. It's down another 9% today. Look at the volume coming in on this down move. All of the failures at the 20-day moving average. I mean, there have been a lot of opportunities technically to get out of the stock. Somebody's getting to the party a little bit late. And then the last one I have is Viacom, VIAB. Here you can see move down, heavy volume, bounced back up. Look at this reaction high right over here, about 26.5. Could not get through that. Rolling over again. Stock was 31 and change just about 2 months ago. Now it's down to 24.59, down another 1.6% on today's downgrade. Those are your upgrades and downgrades. And I am now going to move into the new earnings beats, which is my workshop for today. I'm not sure how many of you are familiar with the Trading Places blog that I have written for the past 4 years. I'm going to continue writing blog articles there, but the daily recap that I did has essentially been moved over to earnings beats as a daily market report. But there is a free newsletter at Earnings Beats. So the first thing I want you to do is just realize that we do have a Earnings Beats digest report. Let me go ahead and pull that up first. Here you can see the recent articles. This was one, if you go into it, you can look and see. It's normally relating to relative strength or earnings in some fashion. I'm not going to say every one of the articles is like that, but certainly most of them are. This comes out Monday, Wednesday, and Friday before the market opens, usually between 7 and 8 o'clock. And so, for instance, the one that was just done yesterday, I was talking about the broadline retailers and showing how this was a group that was tremendous in terms of relative strength throughout 2017 and 2018. But since then, we've just been consolidating. I'm not really giving up on the group, but this is an area of the market that is not really showing any leadership right now. We topped back in July, early July, and we've been downtrending ever since. So I think this is an area we want to be a little careful with in the near term. If I was going to consider anything, I would be looking at maybe something like a Target. They came out with earnings, had this huge move to the upside after earnings. And you can see the relative weakness that had been in play for about 2 years. It wasn't that Target was going lower. You can see Target was actually going up, but it just wasn't going up as fast as the broadline retail group as a whole. So relative strength was down, absolute strength was up, but now it's all changed because now we've got the absolute strength and relative strength. So that's the type of article that you could expect. Sometimes it's about a company like Target that's already reported and has beaten earnings expectations, talks a little bit about its industry group, that sort of thing. Other times it could be an earnings report that's coming up and may look at a company to see how it's performing on both an absolute and relative basis to try and get some clues as to what we might expect with that earnings report coming up. So if you have any interest in earnings beats, you can go over and sign up. I was going to see if I could get that for you. Well, at the top here, I'm actually logged in, but at the top here, you will normally see free newsletter. You can always click on that and then just type in your name and email address, and you will get the latest digest newsletter. And again, that's free, completely free. All you do is give your name and email address, no credit card, anything like that. All right. And again, we're at Earnings Beats. We're really about education. Obviously, we want you to subscribe, but just as I've done over the years with Trading Places, Chart Watchers, Don't Ignore This Chart, those blog articles, I've tried to make those very educational, and that's what we're doing with Earnings Beats Digest, trying to make that very, very educational. And then if you find some things that might interest you and you kind of like our style, then maybe you can try our service, which for 30 days, first 30 days, $7. So you have a 30-day trial. Wanted to talk a little bit about the daily market report, because as I mentioned earlier, the Trading Places blog articles that I did every morning, I tried to publish them around 9 a.m. Those have been moved over now behind the paywall at Earnings Beats. If you go in here, though, to our site and you're not a member and you're not signed in as a member, under the About Us right now, we just have this temporarily up here, Daily Market Report Sample. So you can go in and take a look. When you get to the bottom, and you can see this is a pretty lengthy report that I do every day, and I'll go through it in just a minute. But at the bottom, you can go to Next, because that was just 1 day's report. We have 5 days worth. All last week, the samples are in here. So click on that Next, and then you can see Thursday, September 19th. All right, so I'm going to go back down here, and you can see it is a very lengthy report. But what I start off with on here is an executive market summary. So somebody who's just wants to get a quick and dirty what's happening so far. This was actually published. I don't see the time on here. I try to publish this sometime between 11 and 12 o'clock. So 11 o'clock Eastern and 12 o'clock Eastern. So it's not before the market. So obviously there's no pre-market information in here, but it's after the market opens. So as you'll see as I go through, there are a lot of areas of the market or areas of this report that I think would be important if you're following the market throughout the day. So start off with that executive market summary, then move into the market outlook. Normally this is just a quick look, very similar to what I had in my Trading Places blog. It could be an industry group. It could be the S&P 500. It could be a ratio chart, some kind of intermarket analysis. But that's kind of what I want this area to be. Now, obviously, there are going to be key components of the market that can really impact the overall, the big picture. And so here I was highlighting what I think is a very bullish chart on the internet group, where we had from the late December low through April, a huge rally, clearly outperforming the Dow Jones, or the internet space was one of the best performers during this period of time. But since then, we've seen some rotation. So we've had internet stocks just consolidating while other areas have led the market to the upside. But I find this bullish continuation pattern to be a very bullish indication for the market going forward, because this is part of what I would consider very aggressive areas of the market. Internet, you want this group to break out, and the internet stocks do like the fourth quarter. So I would be watching this chart, because if we can get back up through 1875, this measurement would be from 1875 all the way down to about 1550. So that's what, 325 points. Add that to 1875, you got 2200. So what I was doing was showing the chart, and then I came down and I showed this ABCDE ascending triangle taking shape, and mentioned specifically that 2200 target. So trying to keep everyone up to date. Some of the things I'm seeing, some of the areas within the overall market that I think bear paying attention to. Also in here, I just showed a brief update on the sector summary that you can get here at StockCharts anytime. If you're, let me just show you that. So if you're over here, you go to the dashboard and click on sector summary. You can get this real quick. This is a great way to look at today's relative strength and weakness among sectors. You could stretch it out to a week. You could stretch it out to 3 months, whatever. Going back in here, you can see that as of 10:57 back on Friday, this is what it looked like. So right before 11 o'clock, right before I sent this out to everyone, just letting everyone know what the breakdown in the market looked like. And a lot of times just a quick analysis of what that could mean. Now, under sector industry focus, and the theme for me on Friday, and there's not always a theme throughout, but there was on Friday, I wanted to look at internet stocks. And so looking at the seasonality of internet, and I just mentioned above how they like the fourth quarter. Well, it really starts in September, and then you can see October. The internet group averages going up 8.7% during the month of October. That's not an annualized number. That is an actual average return for the group over the last 19 years during the month of October. And you can see that number swamps anything else. September 3.4, October 8.7, and then we continue with a little bit of bullishness throughout the balance of the year. But that's important, because when you're looking at the chart, if you get a bullish looking chart like this and you're heading into the fourth quarter, when you know the group seasonally does well, I think it just adds a little bit of bullishness. So I thought that was kind of important. And then I moved on to the strong earnings chart list. I think probably most everyone here has heard me talk about the strong earnings chart list. This is another feature at Earnings Beats, where we keep a list of all companies that have beaten quarterly earnings and revenue estimates in the prior quarter, are liquid, meaning that they've traded at least a couple 100,000 shares on average each day. I kind of eyeball it. And then also have what I consider to be strong technical charts. And once they meet those requirements, they go into what I consider my strong earnings chart list. So for instance, let me go in and just pull up the strong earnings chart list for a minute. And when you pull this up, and you view, actually, I'm going to edit. Let's put this in edit mode. You will see that there are 329 companies in here right now. So it is a chart list that holds 329 stocks that have all beaten Wall Street estimates, top and bottom line. They're all liquid, in my opinion, and they all technically look pretty good on their charts, at least at the time I put them in there. Now, obviously, things can change. But for instance, first one, here's Helen of Troy. And you can see here was the earnings, came out in July, gapped up. That area has held as great support throughout and is now still trading at a high, even though the market hasn't done well. So Helen of Troy in the Durable Household Products Index. Every one of the charts in this chart list, by the way, has all of these relative charts in here as well. So it's got an absolute chart of its peer group, and then a relative chart versus its peer group, relative chart versus the S&P, and then a relative chart of its peer group versus the S&P. So you can quickly look to see whether or not you have one of the best stocks in one of the best industry groups. But Helen of Troy continues to perform well. All right, so going back to the strong earnings chart list. So there they are, 329 stocks in this chart list. And this is what I generally, well, it's not what I generally trade off of. This is what I trade off of. So let's go back to that daily market report. So within the strong earnings chart list, what I do is I've been running scans every day, and the scans vary. Sometimes I'll run multiple scans and show the results here in one day's report. But this particular day on Friday, I looked for stocks that were testing their 20-day EMA that were part of those 329 stocks. So in other words, I'm running a scan against that chart list. It's not against all stocks. It's not against the S&P 500. I'm running this scan only against the strong earnings chart list. I show the results, and then I usually will make some comments maybe about multiple stocks. Sometimes I have multiple charts here. I looked at Akamai. I like that 20-day test, and honestly, I don't even know what Akamai, I mean, technology is getting hit, so I'm guessing it's probably down. Well, it was still above the 20. We'll see what happens by the close, but it's still hanging around that 20-day moving average. Liked the move to the upside here, where you can obviously see we're in an uptrend. There's been a lot of volume coming into the stock in August and September, and that's normally the summertime when we don't get a lot of volume. So the fact that all this volume was coming in the first half of August, when we got the breakout, the retest, and then another push to the upside, I don't know. I think the stock looks pretty good. And here's your relative strength charts, all for the most part pointing higher from left to right. I go into current alerts. We don't have any current alerts out right now to trade, and that's by design. We've got the S&P 500 going right up against the all-time high. 3,025 is the highest close. I think on Thursday we hit 3,021 and then have started backing off of it. So putting out alerts just as you're hitting overhead resistance on a major index, probably not the best thing in terms of increasing your odds for success. So we are waiting and generally looking to maybe add stocks, add alerts later this week if we continue to see a little more downside action. I think that'll improve a lot of reward to risks. Then I look for today's mover. So I'm looking for stocks outside of my strong earnings chart list. So there are some who, maybe like me, like to trade off of that strong earnings chart list, but I realize there are a lot of other folks maybe that would like to look at everything going on in the market and where are the opportunities. So I was looking at Dr. Reddys Labs, and I know that India came out with an announcement about lowering their tax rate, try to make their companies more competitive. And so a lot of these companies were getting a big pop. You can see RDY trying to make a breakout above about a 4-month high. We have really struggled at about 39.50. So let's go back here and let's take a look at RDY and get an update and see where we are. You can see we are still trying to get through this 39.50 area. Good news is when we had gapped up on Friday last week and we failed, we came back down close to gap support, continuing to hold that 20-day moving average, but still unable to get that breakthrough 39.5. I'd be a little careful until we get that. But still, this was a stock that was moving. Wanted to make sure everybody was aware of it, and so put it in there. Another stock had tremendous volume, IIVI, but I don't like these stocks when they go up and they try to get through resistance and they have heavy volume like this one does and they fail. So the question was, were they going to come up and finish strong and get the breakout by the end of the day on heavy volume, or was this a false breakout? Now you take a look at this chart and tell me what you think. Well, not that you can, but you know what I mean. Look at the reversal on Friday. There was your heavy volume, failed there. Now look what's happened since. So this is one of the reasons why I like to get confirming breakouts on the close. Intraday moves sometimes are head fakes. If you think about the role of the market maker, they are number one, providing liquidity. Number two, they're trading on their own account. And number three, they are trying to get the best price possible for their institutional clients. So if they have an institutional client that's trying to sell, one thing that a market maker can do, well, I've never audited one, I've never followed one around, but what I see a lot from my experience is that you get these false breakouts. This is not real demand. When you get the move through and there's no sustainability, obviously there's no real demand to send the price higher. So a lot of times these false breakouts will be topping type candles, maybe short term, maybe long term. But I don't like to see that if I'm trading something short term. I don't like these false breakouts, and you can see what happened here. It gets up to 43, and now here we are, literally 2 trading days later, and we're 36 and change. Got to be real careful on that. So try to go through and point these things out. So again, it's educational, but there's also trading opportunities. And then like my blog, my Trading Places blog, I go through earnings reports and economic reports as well. So pretty solid report, I think. I do also want to mention that I just started it this past weekend, a portfolio report. Now at Earnings Beats, we have what we call our model, aggressive, and income portfolios. Now this was updated through Monday, September 23rd, so it's through yesterday. And the model portfolio, all of these portfolios, what they're designed to do is hopefully to outperform the S&P 500 over time. And the idea in each of these portfolios is to try to put 10 equal weighted stocks in each portfolio, and that they all come from different industry groups. So you're not getting 5 software stocks in there at one time, thankfully, this quarter. Because that type of non-diversification can result in a lot of pain, and it takes on a lot of risk to do that. So I try to get into 10 different industry groups in each of the portfolios. The model portfolio began back in November of 2018 when Earnings Beats members kept looking at the strong earnings chart list and saying, well, there's 200-300 stocks on here. What are your favorite 5 or 10? And so finally on November 19th, there was a webinar, and I said, okay, here's my top 10 picks for the model portfolio. We're starting a model portfolio. Here are the 10 I like. And I gave them that 10. And I've been doing it every quarter. So this gets changed every quarter. That was November 19th. February 19th, a new list of 10 stocks was announced. May 19th, a new list. August 19th, a new list. And coming up November 19th, 2019, there will be another list that will be released. Since November 19th, though, you can see the model portfolio has gained 45.4% as of Monday's close. The S&P 500, by comparison, is up 11%. If you look at the aggressive and income portfolios, these both were started on May 19th. So what happened here is I continue to get more feedback from Earnings Beats members and from my partner, John Hopkins, saying that members were looking for not just the model portfolio, because some of their stocks were aggressive, but they weren't crazy aggressive. So members were clamoring for a more aggressive portfolio. And then there were some maybe who were more income oriented that are not looking for major moves in terms of capital appreciation. And they were more interested in an income portfolio that still looked for leaders, but leaders that paid dividends, leaders that were more household names, Colgate, Waste Management, Starbucks, all of these that pay dividends, nice dividends, but also are leaders and recognizable. And so that's how the aggressive and the income portfolios began, May 19th. So they've been out there just over 3 months, maybe 4 months now. And there's your aggressive portfolio since May 19th, up to 1373. And the benchmark S&P since that time only up 4.62. And the income portfolio, and by the way, income portfolio does not include dividends. So the S&P 500 is a total return index, includes dividends. This does not. So I think it's pretty impressive that a more defensive income-oriented portfolio is outperforming the S&P, and that's without including the dividends in our calculation. So you can go in here and take a look at this. I think this will show up even if you're not a member. I'm not positive about that. But there's a lot of information in here on the portfolios. You can see in the prior quarters what was, the different symbols that were used, that were selected, different stocks. You can see CMG here was actually in the, CMG was in the quarter one and also in the quarter two portfolios, and did very well in both, and continues to be actually even in the current quarter. CMG is one of the leaders, and continues to be included in the model portfolio. All right, so those are the different portfolios. I thought it was important just to kind of mention that to give you some sense of what we do. So each weekend now, what I'm doing is I'm doing a portfolio report, and I don't have one of those right off the bat to show you. But essentially, I'm going through each portfolio, starting with the model, and I actually have a user-defined index at StockCharts, tracking the daily movements in each of those three portfolios. So I do send out a chart to our members in that portfolio report, just showing inception to date, how each of the portfolios are doing and how the S&P 500 is doing, so you can constantly monitor the performance throughout. Now, as far as going forward, I'm still going to be doing my blogs at StockCharts. I'm also going to be part of the fall lineup here at StockCharts TV, and we're going to have Grayson Rose on here in just another minute or two, and we're going to talk about that a little bit. But I will be doing a show, Trading Places Live, that runs from 9 to 9:30 Eastern Standard Time every morning. Well, Tuesday and Thursday morning. I am planning to also have a similar time frame, a webinar over at Earnings Beats for anyone who is in the Earnings Beats community. That webinar is going to run on Monday, Wednesday, and Friday. So trying to cover all 5 days, but 3 of those days, Monday, Wednesday, Friday, you will need to be in the Earnings Beats community, which would include the free newsletter. So you don't have to be a paid subscriber. You just have to be part of that free newsletter, because what will happen is we will send out the instructions to join us in the webinar on our website for our members, and then also on the free newsletter for the rest of the folks in our community. So make sure you sign up for that free newsletter for sure. All right, that is about all I had. So I've got a summary slide just to kind of give you some of the things I think that are important. We do those webinars and other events and so forth to keep you up to date on things happening in the market and so forth. You can see that down at the bottom. I've included here an Earnings Beats industry matrix. I'm working on that currently, trying to figure out whether or not that's going to be part of maybe one of the other reports or maybe a separate report, but it's really looking at relative strength and how these different industry groups are moving relative to one another. And I think that can give you some early clues as to where you might want to be in the market. So that is it. That's the new earningsbeats.com. I'd love to have you all come over and check it out. Again, the free newsletter, you just go into the website, earningsbeats.com. At the top, there will be a link that says free newsletter or a tab. You click on that, type in your mail, your name and email, and you will begin. I think you do have to opt in. So once you sign up, then you'll get an email that asks you to opt in. You opt in, and then you'll start getting the newsletter. All right, that is it. When we get back in just a minute, Grayson Rose will be joining me. We want to talk about that new fall lineup on StockCharts TV, so stick around, and we will be right back.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have Chart School and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
Welcome back, everybody. And now I have Grayson Rose with StockCharts. And Grayson, how you doing today?
I'm good, Tom. It's been a while since I've been on the show with you here.
I know. I've been great. I'm better now because you're here.
You've been looking for that moral support for months.
I know. I've been waiting. When I first started doing these shows, you were on the shows with me when we used to do the webinars and all, and I'm still struggling.
I knew you were. So I thought I'd come back and make an appearance here. But yeah, how's this for an evolution? Actually, that's quite the history there. So for some of you viewers, back when we used to do webinars, and they were really webinars, we were actually using a technology called GoToWebinar, and we would invite you into the room. And if you didn't make it, one of the first 1,000 to join the show, then you got booted out. And Tom and I were doing those webinars together. I was kind of his sidekick there, hosting him. Tom, that was fun. Those are the good old days, right?
Yeah, that was the good old days. But please, you weren't the sidekick. You were the star of the show, and I just happened to show up.
Oh, well, we all know that. So, yeah, of course. No, but quite the evolution. To think back from what we were doing with those webinars a couple of years ago and now to everything that we're doing on StockCharts TV and how far we've come, it's pretty cool.
Yeah, and it's exciting. It's we're ready for the next step. And I know that you were on with Dave Keller and shared some of that vision going forward and where StockCharts TV is heading. I know there were a lot of questions, so you're back, and what's going on?
Yeah, so we had a little bit of a powwow yesterday talking about what's going to happen with the fall lineup coming out actually less than a week from now. It's been crazy. We've been working towards this for quite a few months now, but it's starting on Monday, this coming Monday, September 30th. So if you didn't catch the show yesterday, you can go back and find that on our YouTube channel and see what Dave and I were talking about with some of the shows that are going to be coming out. But I wanted to cover that again really quick so everyone is aware. And then also, like Tom said, there were some questions that came out of yesterday. So I wanted to cover those. We'll talk about what's happening with MarketWatchers Live and the whole sort of content schedule. So anyways, the quick overview of our fall lineup. We have David Keller, who has joined us. We have Larry Williams, who's expressed a ton of interest in working with us. He's really excited to launch a new show. Dave Landry has been wanting to host a show for some time now as well. Julius DeKempenaar has been wanting to host a show. And then Tom Boley, the magical, fabulous Tom Boley, wants to keep doing more and ramping it up. So we sort of took a look at this and we said, okay, we've got all these people that want to do these new shows. We want to bring them to the channel, give them some space and an opportunity to share their voice and their message with our viewers. But it's, as opposed to launching those shows one at a time, sort of over the course of a couple months, we said it'd be a lot more fun if we launched this as a big fall lineup. It's kind of a reboot. In some ways, a nice little refresh for the channel. So we are bringing a whole bunch of new shows to the channel, and we're calling it our fall lineup. All of that is going to kick off on September 30th, on this coming Monday. And we've got new shows launching almost every day of the week. So we've got David Keller launching his new show on Monday. We've got Tom, you're launching your show on Tuesday morning at 9 a.m. Eastern. We've got Julius DeKempenaar launching his new show, Sector Spotlight, also on Tuesday, and then we've got Dave Landry coming in there on Wednesday to launch his new show. Larry Williams coming in on a Thursday to launch his new show, and then we've got Chip Anderson actually, who's been doing his latest show for just a couple weeks now, just kind of as a way to test it out and fine tune the content and everything. So he's going to be also live on Saturday. So for almost every day next week, we've got a new show, new content. Something really fun to watch and tune into. So here's the full lineup of what we've got coming for this fall launch. Like I said, the fall lineup includes the Final Bar with David Keller, Sector Spotlight with Julius DeKempenaar, Trading Places with Tom Boley, Real Trading with Larry Williams. We've got Dave Landry's Trading Simplified, and then we've got this great new show from Chip called All Aboard StockCharts, which is on Saturdays. And that one is kind of more instructional to really help you get off the ground with a new StockCharts account. So all of this is coming to the channel on Monday, starting September 30th. And I mean, I'm thrilled, Tom. I don't know what you want to say about your show. I'm really looking forward to your show too. But it's going to be a real fire hose for all our viewers next week.
Yeah, I'm really excited about it because, as you know, Grayson, I've had discussions with you and Chip. I like doing morning shows.
Yeah.
Being on the East Coast, it's a little easier than some other parts around the world, especially out there where you all are on the West Coast. Market opens at 6:30. It's kind of difficult.
Right.
But on the East Coast, it opens at 9:30. So doing something in the morning, doing a show in the morning, I think will really give a lot of the StockCharts visitors and subscribers a place to go before the market opens.
True.
Yeah, I mean, we've got many. I've got many subscribers to the Trading Places blog, and really, I just look at this as a show that's bringing the blog to life.
Definitely. No, and we said this on the show yesterday, actually, with Dave when we were chatting. I said I'm really excited about your show because I think it's a great way, a better way actually, to showcase you and your approach to the markets and what you're watching and everything like that. I mean, I've always loved chatting with you because you are so engaged and just in touch with what's happening. After the market closes, the after hours action, the pre-market action, everything that's going on in the futures markets and everything like that. And so giving you an opportunity to really share that, I think is just going to be such a great opportunity for you to present, a different perspective. It's different than when we're doing stuff here in the middle of the day, middle of the trading session. So I'm really looking forward to giving you that spotlight time and seeing where you take it. I think it's going to be a lot of fun for you and for the viewers as well.
Yeah, well, here on Market Watchers Live, I've had, it's been a great run, but a lot of times everything's already been baked in. In other words, we've already had the earnings reports from last night and this morning. We've already had the economic reports out. The market's already reacted to it. I think the difference is going to be this show is going to be before the market opens. Definitely. So I can be looking at potential impact from some of these things before the market opens, which I think will be, certainly I hope will provide everyone with a little bit more information as they approach the trading day.
Yeah, I agree. I'm really excited to tune into your show and see what you can do with it. So on that note, I do want to talk briefly about some of the questions that came up yesterday. The two big ones that we got were, what's happening with all the other shows. There are a whole bunch of other great shows on the channel: Chartwise Women, the Decision Point Show, Power Charting, Market Buzz. I'm a big fan of Dan Russo's show too, the one that we do in the morning. So there's going to be some changes, going to be some shifts. But everything is staying. All of the shows that we currently run are staying, with one exception. That one exception is Market Watchers Live. So basically what we're doing with the hosts of Market Watchers Live, which has actually been shifting. We've been bringing Dave Keller in here for the last couple of weeks, and Greg Schnell has been on Market Watchers Live quite a bit. Julius Kempenaar has been on Market Watchers. We're basically sort of breaking the hosts of Market Watchers Live, traditionally Tom Bowley, as you know, and Aaron Swenlin, out into sort of their own show. And what that allows us to do is kind of provide more coverage for you guys, for the viewers, throughout the day. So like we were just saying with Tom's show, we get to take Tom and bring him before the market to give sort of a different perspective from Tom. We get to bring Aaron's content after the market, keep her there where her decision point signals and everything have executed, and it makes a lot more sense for her to be after the close. So we're basically breaking the hosts apart to give more coverage throughout the day and add in all these additional shows and bring more content from a longer list of people. So as a result of that, Market Watchers Live as a show is going away, but all that content is just going to be in different places now. It's going to be either on Tom's show, on Aaron's show, on Dave's new show, on Julius's new show, on Greg's show. There are all these shows that we're still doing, and all those hosts are still around. They're still all here. So all of the content that you know and love from Market Watchers Live is still going to be there. And that does include a lot of our guest interviews. That's been definitely a highlight of the channel, has been these guest interviews that we've done on Market Watchers Live, really since its birth. And most of that is going to be some on the individual shows, like Tom. I'm sure you'll have guests from time to time. I know Julius will as well. Dave Keller is really going to pick up a lot of the guests, though. He's got some great plans in place to do some pretty special content with these guest interviews and people that we're going to bring on his show. So those guest interviews are also still going to be a feature of the channel. They're just sort of moving over to the final bar. So everything is staying. All the hosts are staying. The only thing that is changing is that Market Watchers Live is kind of shifting around. We're just shifting the content from this time slot under this brand to a couple different shows to really kind of focus the content a little bit more. And, Tom, you don't want to share the spotlight. We want more Bowley here. We want just Bowley. So, this is going to give us that opportunity, right?
Yeah, I never really quite looked at it like that, but I appreciate it, I think.
Yeah. No, I'm thrilled. I mean, I think this really is going to give all of our hosts the opportunity to dive deep into their content and their perspective on the markets and their approach and everything like that. And I think it's going to be a more powerful package for a lot of people.
Well, and I do too. I would just add, I've been hosting here on Market Watchers Live for quite a while now, and the folks that are coming on and having their own shows and part of this lineup are people that I've been interviewing and talking to here on the show over the past few years. So, I mean, this is pretty exciting, I think, because it really and truly is some of the best technicians out there.
Yeah, absolutely.
We've experienced it firsthand here on Market Watchers Live, so I'm looking forward to the lineup.
Yeah, we see this really as the next step forward for StockCharts TV. It's in no way a step backwards. It's a huge leap forward for us. I mean, bringing more content from you and from Julius and Dave and everything, but also bringing some new faces to the channel like Larry and Dave Landry. We're really looking forward to that. So I think this is a big leap forward for us, and I just can't wait to bring this content to all the viewers. It's going to be a lot of fun.
Yep. Well, it's awesome. I'm looking forward to it. Again, it's all starting next week, and really appreciate having you back on here, Grayson, to kind of explain and walk everybody through it. Yep. Great job.
All right, Tom, I'll catch you on your new show.
All right. Sounds good. Maybe you'll be my first guest.
There you go. You're roping me in already.
I'll see you. Thanks, Grayson.
See you, Tom.
All right. It is time for the 10 and 10. And I tell you what, Zach, are you ready?
I am ready. Your first one is EL Estee Lauder.
All right. We're going to go through this thing fast. Right? 10 and 10, but 10 and 8.
It's going to be fast, just like that car that Grayson just showed.
Exactly. All right. Estee Lauder. Big gap up here with earnings back in August 19th. Huge move up. I really like the stock. It's in a pretty good space. Personal products. You can see personal products has been, for the most part, moving higher. Had a little bit of a glitch here about a week and a half ago, but we are turning back up. So we're seeing relative strength coming back in. This is a stock that is one of the leaders in the space. I think as long as the trend line and this area of support hold, I'm going to say between 185 and 190, I think Estee Lauder goes higher. I like the stock.
All right, your next one, DENN, Denny's.
Well, it's in a great space. Although the restaurants have cooled off of late, it is in a good space, and it's one of the leaders. So Denny's, I think, looks pretty good. Here's what I was talking about in terms of relative strength cooling off the last month or so. Restaurants have pulled back, but notice Denny's remains in an uptrend relative to its peers. Volume trends during the uptrend, I think, very strong. So I would say, again, you want to look for lines in the sand. You don't want to just blindly hold on to things until you're so distraught that you can't continue. But here to the downside, I think the gap up at the end of July with earnings, I think that's the area I would want to hold. I think if you roll over and go below that level, you've lost your moving averages. So I'm going to say around 2160. As long as Denny's remains above there, I think it'll remain a leader.
All right, your next one is SLB Schlumberger.
All right, moving to the energy patch. I'm not a fan of energy, I'll just tell you right now. I know we had the big move up in energy last week, but we get these. You get, some excitement in groups like this. Energy's been underperforming the S&P 500 for 8 years. 8 years. Yes, there's going to be a time when energy is going to be awesome, and it's going to be probably during a period when the dollar is falling. That time is not now. I think on this one, and Schlumberger was showing some pretty good relative strength and still is versus its group, but the group is horrible. So if you've got a leader within a weak group, I think you've got to make sure you keep your stops in play. And there was a recent low. That also coincides with the 50-day moving average. We're now below the 20. I would just be careful if Schlumberger were to get much below about 35 and a quarter. We're almost there. I think a close below 35 and a quarter would really spooked me. So I'm not a fan, but if you are holding on to this one, just make sure you're careful here because it is part of a weak group.
All righty, next one, Nike, NKE.
All right, I am watching this one like a hawk after the close today. They report their earnings after the bell today. You can see on the chart how important the level is. If they report strong results, and they can break above that 89.50 area where they have had triple top, I would be very bullish because we have been consolidating here for the last several months off of an uptrend. So a good earnings report and a gap up, I think, would be very bullish for Nike. Nike relative to the footwear space near its 52-week high. So there's a lot of expectations, I think, going into this report. And so Nike's got a good chance to maybe be a catalyst to take this market higher. Watch this one closely after the bell today.
Next one, Sunrun.
Yeah, renewable energy has been strong, but this one hasn't been one of the better ones. So I would just point out the relative downtrend that has been in play here for quite a while. I know Enphase Energy has been crazy in terms of its volatility, but I still think the overall long-term relative uptrend on Enphase remains in play. And I know Enphase is having a rough day today. I think Sunrun, because it is underperforming in a strong group, I think that would make me want to make sure that we don't lose that 20-day moving average. Now that we've started to strengthen, volume picked up a little bit, I think that you've got the 20-day right along with the area of the breakout. Here was the prior high. We broke out, increasing volume. Now we're coming back down, testing this area. If we were to move back below 16, I would have a stop in play. I don't trust it as a relative laggard in the group, but I like the group. So mixed signals here.
Okay, next one, CDW Corp. CDW.
All right, CDW. Nice breakout recently. Did fail. I think we're probably going to hold either the 20-day moving average or gap support. We've got a beautiful trend line here. Let me go ahead and annotate the trend line that's in play. I think that this is a stock poised to go higher. Of course, you want to make sure you keep your stop in play just in case. But we could draw it like that. I'm going to draw it up this way, just a little different, and then drag this down. See, that's where you get the majority of your connections on this trend line. So I would even shorten it maybe to there. To the upside, obviously, we want to clear that recent high. We had a lot of volume come in, couldn't get through 122.50. I just think the short term, you've got gap support maybe around 114, and then the trend line comes in about 112.5. That's where I would watch it to the downside, but I believe CDW goes higher.
Your next stock is MYL, Milan NV.
All right, MYL. Well, you're in the pharmas. Pharma actually was having a pretty good day today. I don't know if it's gone back down or not, but here, Milan not having a good day. And the reaction high is what held this stock back. And I'm going to show you what I'm talking about here. Had the huge selling on big volume back in May. And then here's the reaction high. So here's where the sellers came in. Buyers get control, and they couldn't get it any further than about that 23 level. The reason that's important, because I think once we clear 23, I think we'll have a pretty good shot at 26. It's not going to be a whole lot of resistance in here. There was just a straight move down in terms of selling. But notice we got the failure here at the 23 level, lost the 20-day moving average. I think this sets up off of a downtrend, just sideways consolidation. I think this one remains very bearish. I would pass on it.
All right, your next one is APPS, Apps Digital Turbine.
Yeah, another one that's in the software space. It was getting hit earlier today, but I think still remains fine. It's a volatile stock. I think it's going through a period of consolidation after a huge run to the upside. Talked about this one frequently when it was coming down before. I still believe that $6 area is a level to watch really closely. That's where we broke out on heavy volume, came down, held on heavy volume selling, held again on heavy volume selling. I think $6 is a level we have to watch. And for now, we're just sideways consolidating. But when you look at the relative strength versus software, this still remains one of the best stocks out there. It's just small. It's volatile. Make sure you have the stomach for it. But APPS, I think, still looks pretty good here.
Okay, second to last one, AT&T.
All right, T. I know the stock's been doing well. I really like that bounce off the 20-day. I mean, we've seen this before where the stock gets, going and then it pulls back, can't hold the 20, gets going. And now since then, the past 2 months, notice all these successful tests on the 20-day. Notice the volume coming in on the upside. That's what you want to see with an uptrending stock. So AT&T's gone from a stock that was just a good dividend payer to a stock now that looks like it's poised to give you some capital appreciation along with that dividend. So I'm pretty bullish the stock here, the way it's trading. I would simply say as long as it continues to do what it's been doing, which is holding right here on these 20-day tests, it's hard for me to get bearish the stock. I think it looks good here.
And the last one is ZYXI, Zynex.
ZYXI. Wow, those are some infrequent alphabet letters.
Yes, and it's very fun.
Yeah, I see a huge move up, and then I see a symmetrical triangle. Just a quick look. It is in the medical equipment space, which I really like. I think when this one breaks to the upside, it could be a really powerful move. But what I'm looking at is right off of that top, coming down here. There is your declining tops, and then here you've got rising bottoms. So I think we are squeezing off of an uptrend in this, and I believe the next move is going to be the upside. It's only traded 128,000 shares, so it's not a huge volume play, but it's been a pretty good performer in the medical equipment group, and medical equipment relative to the S&P continues to perform pretty well, putting in these relative higher highs, higher lows. I think this is one to watch. I mean, it's going to be, again, very aggressive, very volatile. You got to be sure your stomach's okay for that. But if we get a move up, especially above this recent high around 10.5, and you see volume coming in, I think it's likely to make another run for $12, maybe beyond. So that is the 10 in 10. And you've got the stocks right up there on your screen. I mentioned earlier, I wanted to take a poll and see what you all thought about your trading and investing strategies. Are you a fundamental person? Are you a tactical person? Or are you both? And I am really glad to see the answer to this poll. 75% of you say you buy and sell based on the combination of both. I think that is better. If I had to pick one or the other, and this is coming from a former practicing CPA in public accounting for 20 years, if I had to pick one or the other, you can have the financial statements. I will take the charts. The charts tell me everything. Believe me, there are plenty of CPAs and economists and technicians and everything else at these big firms that are looking at these companies and these charts. And so when you look at the price action and you study the history of the price action, you are in essence, I mean, this is what technical analysis is all about. You are in essence taking all the known information out there and you're getting a current price. This is what the market as a whole believes a stock is worth as of a particular time. And when you study these patterns, because companies go through accumulation phases, they don't tell you, there's no announcement that, hey, we're going into an accumulation phase. You've got to see it by what's going on the chart, looking at the volumes, looking at the technical patterns. That's what tells you those things. So anyway, great poll. Really enjoy that response. You can see our upcoming schedule. As Grayson mentioned, Market Watchers Live ending this week. We're going to end on Friday. Aaron will be joining me for that. Really looking forward to it. Thanks to all of you for joining me today. Really appreciate you being here. Have a great afternoon, everybody, and we will see you back here tomorrow. Happy trading.